Throughout history, metals have been used as money. In 1971, Richard Nixon betrayed the world by removing the last shreds of gold from the dollar. Ever since then, the value of currency has been eroded away at an ever-increasing pace. Central banks and investors still hold on to metals in order to preserve wealth, particularly through inflationary periods. Traditionally, gold and silver are more commonly held. But what metal has been shown to perform even better during the past couple decades? You came here for the truth, so let me unveil that for you. Today we are going to talk about copper. That's right. Well, let's begin with this. Showing you the gold chart. Since the year 2010 approximately, you can see what has happened. It went all the way up to about 1900, came all the way down, and has been trading in this range, and today sits at about 1300. Look at the silver chart, spiking up to about 50, and ever since has been trading around that $16 mark for several years now. And copper has really grown over this time period. It has been volatile, yes, but looking at it from back in the 90s up until today, you will see that this one metal, which is the forgotten metal, has performed extremely well as a hedge against inflation. So I'm going to get into this today, talk about the value of copper and historically as well. For centuries, gold has been a go-to asset among investors worried about all sorts of financial risks. In the past decade, ETFs backed by the metal drew more money than any other commodity, even when the world's biggest central banks hoard bullion as a reserve asset. But when it comes to inflation, which can erode the value of portfolios that don't keep pace with the rising consumer prices, anyone who bought gold as a hedge over the past 25 years missed out on a much better deal: copper. Now, I had to read this multiple times and go through the article and really think about it for a second, because you always think gold is the hedge against inflation. And so, of course, the average individual, you can keep a couple small bars of gold and that's worth a lot of money. However, copper, you'd have to fill your house with it to equate to some of the values that people have. I understand it's not the same way, but just looking at it purely from a financial aspect, that's what we're going to do today. While data show that the broad commodities indexes provided the best bang for the buck during the periods of rising costs in the US, the red metal still stands out. So I'm going to go further into this here. It shows you some details. For every 1% annual increase in the consumer price index since 1992, copper jumped almost 18%. That's more than 3 times the 5.2% gain logged by gold, according to a correlation analysis. Now, they get into more details here. Just let me read this one thing then. Copper is more sensitive to inflation and the dollar because of its uses and its growth with the economy. Investors are more comfortable with gold. When you run the numbers, gold has relatively low sensitivity to inflation. It goes on. All right. One of the points that I want to make about copper is that it is heavily used as a industrial commodity. Yes, gold is. Yes, silver is. There's no doubt about that. But a lot of the gold that has been mined remains, as bullion in vaults and things like this. So copper is generally more consumed. It's used in all the construction and everything else to much more of a degree than gold is, than even silver. Although these two other commodities are used considerably, there's no doubt about that, it seems to be that copper is generally regarded as more of an industrial metal. But when we look back in history, they used to devalue their currency with copper. And so it may have less value in a direct sense. It seems to be that it could provide people with a hedge against inflation. So don't forget about copper. It's, it might be the sort of the forgotten metal, but let us not forget. This right here shows us some of the different metals and commodities and everything else, you can see that copper has performed relatively well here over these past few years. Gains for every 1% rise in the US CPI. We're looking at from 1992 to 2016. And you'll look at, for example, the S&P 500. When you compare the two, might be a little difficult to see, but all of this is all copper's gains above that S&P 500. And then you compare that to gold, for example. Gold has, of course, outperformed the S&P during this time frame. Precious metals, agriculture, and so on. So it's interesting to look at. Now, this was a very good infographic that was provided here. I got it through Visual Capitalist. Copper, the inflation hedge. Copper is closely linked to the health of the economy. Not only is it used to manufacture a wide variety of goods, it can even act as a hedge against inflation. So further along here, they show us this. Below we can see the copper to gold ratio versus 10-year yields. And you will see the copper to gold ratio right here. And as time goes on, you will see how they're tracking it basically against the 10-year treasury. And what we can notice here is very clear on the left-hand side. When rates are rising and the economy is heating up, the copper to gold ratio also rises. And that should tell us something. So, I just want to conclude. When you look at precious metals, understand their uses. This is very important because people are constantly comparing the two, let's say, equities versus precious metals. Or do I buy US stocks? Do I buy gold? And we shouldn't think like that. We should have the idea in our mind that precious metals, number one, are a hedge against inflation, and they have been money for a long period of time. We know this. So it is important to include precious metals in every portfolio. Your portfolio is not diversified unless it includes precious metals. Now, if your portfolio includes exclusively precious metals, then it's not diversified. It is important to hold that. Look at cultures from the East in particular, where they use precious metals to pass wealth down from generation to generation. It is very common in cultures, whether it's weddings or whether it's important celebrations, where gold will be passed down. Gold coins would be passed down, given to the individuals, not cash, not gifts for the household, but they are given gold and perhaps silver, perhaps other metals. Generally, gold seems to be the one. And you can see how it is done this way. So these cultures understand that, but it's the Western cultures that do not. And so they put more and more of their money into, let's say, stocks. And that's fine. But things change over long periods of time, and we need to understand that the companies that exist today may not exist tomorrow, whereas precious metals, to be specifically to pass wealth down generation to generation, to be a hedge against inflation, we can understand that precious metals obviously are great for that. They have disadvantages as well. They do not provide passive income. There are different reasons why you would want it. That's why you diversify. If you have a portion of your portfolio in precious metals, then you're able to get the benefits of it. But you don't want to have everything, as they say, all your eggs in one basket. That's something that I don't think is wise for anybody to do. But whatever it is that you do, just make sure that you are well prepared, okay? Whatever you want to do, you have to be, your own decision maker. So I suggest to everybody, just be prepared, know what you're doing, make your decisions. And my recommendation always is maximum diversification. So even within the asset class itself, if I'm holding gold and silver, am I holding just gold and silver 1 ounce coins, for example, the exact same coin? Or am I going to hold 3 different coins of each, maybe 2 different types of bullion bars? Maybe I'll get some numismatics, maybe I'll get some junk or common coin silver, maybe I'll have some of the 1/10 ounce of the gold. There's different things. all different things. And the more of those things you have, the more diversified you are, the better you'll be able to do when the time comes, when you need to sell, when you need to be able to profit from it, whatever it might be. So that's all for this video. If you found it informative, please give me a thumbs up. Understand this is not opinionated here. I'm just trying to show you the information that I've been provided here, and I'm providing it to you. That's all for this video. If you found informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.